All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Interesting market out there today. Not a whole lot in it. In fact, when you just kind of go look at the metrics and you look at everything that's happening, there's no real change, in those metrics. We are seeing the bullish percent index tick to a point where it's actually setting a bullish signal here today, but from a pretty overbought type of situation. So not something we typically will see. In fact, you can see over the last year, this is the highest the bullish percent index has been. And this just doesn't look like one of those kind of strong bullish confirmations. More like, hey, the market has just been strong enough. It's dragged it along, here with it. But, if you look at a weekly here, the bullish percent index, you can kind of see what it looks like. There's still plenty of room to go up, here for it. And, we are seeing that little change, come in today. As far as, just number of stocks trading above something like a 7-day moving average, it's been around 80%, a very strong bullish territory, but dropping off here today. And I know the market's, green or red, depending on what index you're looking at. But we are seeing a few things, drop below those sevens, but not in a very bearish way. If you look at something where some of the weaknesses that's in the Qs, and you see they're not even close to that 7 here, at least not yet. So we're seeing just general conditions about the same. No real monster change in that. Now, as far as some individual trade setups, there's some things out there. So let's go take a look. Let's start with EWW. So this morning I see this tweet from U.S. President Trump. And it's a tweet that, is basically, towards Mexico and giving them a year to comply and, with helping with the immigration issue and, talking about auto sales and, a whole bunch kind of mixed into that. And I don't have EWW up on my list of stocks that I watch every day. But I thought, I wonder how this is affecting the EWW. I mean, this is the Mexican iShares and, okay, this type of language towards Mexico. Okay, this, maybe we see kind of some dip, maybe a little breakdown, here in Mexico. Because I had seen the reversal on Monday here, but you'll notice it was a reversal on pretty low volume. Didn't do much yesterday. But as I'm watching it, it's not dropping. It's doing what? It is rallying. And you can see, here's the tweet right here. This is the tweet. And, 2 minutes later, popped right on back. And, that just kind of screams, all right, breakout coming. And you can kind of see the pattern here with EWW. Nice little kind of head and shoulders type action here on it. After, kind of the retracement rally, we've now had kind of a longer-term consolidation, kind of a 3-month consolidation. And, you can see some of the volume that has been building in here over the last month. We had kind of a sharp drop here kind of middle March. And no real follow-through selling to it, and, trying to push itself into a breakout area. Now, if you look at kind of the technical measurements here for a breakout target, we're looking at about a $49 to $50 price target based on the size of the kind of the head part of the head and shoulders pattern, about a 47 to 47 and a half price target based on the last shoulder. So, anywhere up in this kind of 47 and a half, 49 and a half area is where we would expect, to push into, which is ironically right here near kind of the August, September lows. And, would not be surprised to see that hit. From a risk-reward standpoint, it sets up really well, here off of the lows of this week, this kind of 44 level. You can jump in, you can play for this breakout to happen, and you don't have to pay too much attention as long as it holds 44, breaks 44. You say, okay, sayonara, I'm out. done, move on, and go. So EWW, very nice setup here. I'm not in it yet. I would like to see, maybe a little break of 45 here. I'd like to see a little more confirmation. I won't get as good of risk reward if I wait for that. But it's one that me personally, I would like to see it. But the risk reward, the trade setup is there, the chart pattern is there, and it's a setup as they come. With a stock like EWW. Now there's a group of stocks out there today that are kind of doing the same thing. FCX, Halliburton, Gold, GLD. They all gap down, and they're all holding up, and they're all holding some key levels. So here's Gold off the lower Bollinger Band, right? Here's FCX off of, here, I'll show it to you. Here's FCX off of the 7-day moving average, right? 200-day moving average as well. Halliburton, it pushed into this upper band earlier. Band's contracting, found a little resistance, came down to the 7 today, rebounding off of that. Band starting to expand. They're all the same type of set. The risk reward on them is very simple. It's buy with a stop on today's low. And it's set up in a better way than what it has, been. If you're bearish on these, you want in on the downside. Today's low is the area where you say, hey, when that breaks, let's go. But these are all three of these, and then we could go to a bunch within the sector with very similar patterns. FCX off of this 7-day moving average is kind of where the set is, and Halliburton, Gold, all three of them, and the option pricing is pretty darn good on all three of them, and just sets up for a nice risk reward on emerging trend types of plays with something like an FCX, which has started this kind of emerging trend, with a Halliburton, which bands are starting to expand, and that with Gold, where not really playing an emerging trend, longer term trend, yes, shorter term kind of support level. So all three of these very typical of what we see within this group and sector here today. And from a risk reward standpoint, very nice little setups on, these kind of piercing line candle patterns, that are out there today. And piercing line candle patterns, have about a 60 to 65% accuracy to them, depending on, how you exactly define it. But there's a pretty good, probability there with those. And, these are three ways to look to take advantage of that. And then last but not least, shop. Now, I did a little day trade here this morning. I bought some Twilio puts as it started to drop. I got out of them way too early, just way too early. So, a little chump change there. But you'll notice Shopify doing something very similar here today. But coming down to the lower Bollinger Band, a big volume sell-off. And, if you look at Shopify historically, these sell-offs can get pretty intense, right? I mean, they can add 2-3 days on them where they get really intense. What's the driver here? Well, research company came out today and said by the end of the year, Shopify is a $100 stock. That's a pretty bold statement. It's a pretty bold statement. Whether you agree with them or not, whether you agree with it fundamentally or things like that, you think about that type of statement and what that does to, some swing trader chaser confidence. Because what's happening today with Shopify, the chasers are getting hammered. That's going to drive them out, right? What's happening with, some of these like a Twilio and Shopify, which are pretty, premium valuations. You're starting to get the short sellers looking at them. And so is there some catalyst for, some more potential downside here with it? As far as just simply trading it and trying to guess, hey, you know what, let's buy some puts with a 196 or 197 or 198. It doesn't work. There's not a good risk reward stop level or price level to kind of base this off of. And it's the same way, after a day like this right back here. There's not a good risk reward setup. It's a stock that just got hammered, and you know what? It could have a couple more hammer days associated to it. But you know what? It's also one that just got hammered, and it could see it fly higher very, very quickly. But, you look at Shopify, most of these big down days that it has, there's further downside. So, yes, it's not a good risk reward, but it is a very good probability that it will continue to drop. So how can you take advantage of something like this? Well, this is where, you put what you're willing to risk, in on the trade, right? So you take something like a Shopify, and you can come in, you can look really short term, right? And you say, hey, you know what? Historically, this thing drops the next day when it has this type of action. And, how much can it drop? Well, today it's down $13. You know what? Does it have a double type of drop? Maybe another $13 drop tomorrow down here to 180. Well, you can buy the 185 options here for 50, 60, 70 cents, depending on what they'll fill you at. If it goes to 180, they're worth $5. So, you can make 10 times on your money, 8 to 10 times on your money if you're right. You put what you're willing to risk, and boom. You let it go. You see where it is tomorrow afternoon, and you run with it. You could come a little closer to the money, do the same type of thing. Your reward potential won't be as good, but that type of set is out here and could pay off. If you come out and you want to buy any sort of time, the options are significantly more expensive. They're significantly more expensive. And then you see the spreads. You're dealing with spreads that are pretty high. So it's very difficult to get in here and do some sort of, put spread or something like that and be able to be confident that you can get a good entry price and a good exit price. Just makes it very difficult. But if you want to come out and you take a little bit of a longer term look and you say, well, you know what? They're talking about this stock being a $100 stock by the end of the year. So, all right, can I position for a much bigger style breakdown here? Well, you can come in and start looking at some of these put spreads, and they start to make a little bit of sense. The 150 to 130 put spread, right? Now, these aren't going to be things that you look at every day and you say, hey, what's it doing today? What's it doing today? Do I get out now? This is something where you've got to let it really tank and move well below 130 if you're going to do something like the 150 to 130 put spread, and get in there for maybe $5. You can get in that for $5. It'll be worth $20 if it goes your way, and you have kind of a triple on your money, putting down $5, and you need it to do what? To push down below 150. Is that much of a long shot? Does it need to, absolutely crater to get there? No, I mean, the stock has had these types of dips in the past, right? And it's had a monster run up. A retracement would take it down to 150. So we're not talking about a price level. It's absolutely absurd, here with it. And it is something where you can give yourself plenty of time. For me, the one I'm looking at is the July. And it's only 100 days, so it's not, a ton of time here. But this 180 to 150 put spread, it's interesting. 170 to 150 put spread, so about 420 and, about 870. So I can get in there for just over $4. And I'm looking at that. But again, this is the type of play that is, very aggressive if you're going to go on the put spread side and hold it and say, hey, you know what, I'm going to let this trend materialize. And kind of a lot a lot more aggressive, but a lot less risk if you come in and say, hey, you know what? The tendency for this stock after a big down day like today is to have a secondary down day. And so, all right, let's just kind of bet on that component and go. And honestly, for me, by the end of the day, I'll most likely have a little handful of these and see where they are at the close on Friday and go from there. And then look at a bigger put spread after the stock bounces a little bit, right? Because the implied volatilities are going to be are a little elevated today after today's action. Spreads are a little bit higher. So, on a calm, quiet day for it, those spreads are going to come in. It's going to be an easier fill. It's just going to be a cheaper price. It's just going to be a whole lot easier. So that's kind of how I'm looking at at trading Shopify here today. All right. So anyway, EWW, that kind of, piercing line action with some of the commodity names like Halliburton, FCX, gold, and then, a little Shopify action with some of the things kind of, going on there with that stock. Now, the last one I'll mention here is Micron because I was asked about it. And if we go and we take a look at Micron here, you know where I stand. I am not bullish on Micron. After the earnings and after some of the stuff that's been said, after, some of the trends that we're seeing, I think $40 is a very expensive price to be put on Micron. But I followed and I've traded Micron long enough to know, hey, you know what? When it goes, it can make some pretty insane types of moves. But yesterday, it broke out above this earnings reaction, and it failed to hold. And it's selling off on a gap down. We have an abandoned kind of candlestick pattern here. This is one where kind of short-term stop on today's high, play it lower type of action with the high volume selling that we're seeing come into it. But it's one that, from an odds standpoint, could very easily just gap up, continue to kind of trend on up into this kind of 46 to 48 area. And for me, that's kind of where I'm looking and saying, all right, we start to get into 46, 48. I'm willing to be a lot more aggressive on the downside, but not until then, at least until we see some lower highs and lower lows. Because let's face it, Micron doesn't have higher or lower highs and lower lows. It's still, for this year, higher highs and higher lows that we have seen with the stock. And, but overall, I do expect it to go lower. But, it's not a place where I'm aggressively getting in. And I've kind of had the same with AMD, right? I'm bearish AMD. I was fortunate enough to take a little bit of advantage of it back here. I did step into it a little bit here in January. Didn't really pay off. And, I've been looking for a place to step on it since, but it just has not given that as the highs have continued to be higher and the lows have continued to be higher. And so, we need to see a little bit of shift, a little bit of change in that, to say, hey, you know what, I want to get really aggressive or something of that nature. Or I need to see some sort of big high volume top come into play. And we've seen big high volume pops come into play, but we haven't seen that big high volume top like what we saw right back here, here in September come into play yet, for Micron or for AMD here in 2019 so far. Okay. Alrighty, so anyway, those are just a few, that I'm looking at that I'm, looking to jump into. Thanks for hopping on, and we'll talk to you later. Take care.